Alright, welcome back everyone to this fourth video in this series where we are building out a company and following it through a series of transactions. In this video specifically, we're going to take a look at how you handle prepaid expenses when you're in an accrual basis of accounting or accounting that's in compliance with GAAP or generally accepted accounting principles. If you haven't seen the previous videos, make sure you go back and watch that because in the very first video, I show you where you can download the workbook for this course as well as how it works. And you're going to need this workbook in order to follow along with this course and also to follow along with the build out of this company. Lastly, if you haven't hit the subscribe button yet, make sure you do that and become a student of this channel, as well as hit the notification bell so you're notified when I post new content. All right, let's get into this video. I'm on my computer screen now, and if you remember in the last journal entry, we looked at how you record the purchase of a fixed asset. So let's go down now to JE number 4, and I will zoom in on my computer screen so we can read this together. Okay. Date, March 31st, 2020. In order to minimize the risk of doing business, you decide to purchase 12 months of liability insurance from U.S. Insurance Incorporated. You prepay for 12 months upfront on March 31st, 2020 for $24,000. The insurance policy is effective from April 1st, 2020 to March 31st, 2021. Okay, let's talk about what's happening. We are purchasing something on March 31st that we expect to receive a benefit for over the next 12 months starting on April 1st. Now, this is somewhat similar to purchasing a fixed asset. If you remember in the previous video, we bought a fixed asset, but we didn't expense it. We recorded the entire purchase as an asset on the date of purchase, which we will then depreciate in later videos. So now looking at this video, it's similar to a fixed asset, but it's categorized differently because a fixed asset is something very tangible like property or equipment. A prepaid expense is more intangible, like the purchasing of a insurance policy, for example. We're prepaying for that 12 months, which is very common in most business practices, but we're not going to expense it because we expect to get 12 months of coverage. And so the way it happens in accrual accounting or accounting that's in compliance with GAAP accounting is you recognize the expense over the benefit period. So for example, we would record this asset on March 31st, but we wouldn't start recognizing an expense from this asset until we close the books. Let's say you close the books at the end of April. Well, you would recognize 1 month of expense. But we're not going to focus too much on the expense piece here. We're going to look at that towards the end of this course. Right now, we're going to look at how do you record the entry when you just buy that initial fixed asset. So let's take a look now at our journal entry. I'll scroll over here. And the first thing we do is we put in the post date. It's super important when you're working in accounting systems. So you tell the accounting system in which period this transaction took place. And now let's take a look at the available accounts we have. So if I scroll through, I'm going through and I see I have something here for prepaid expense. So this is the account I set up for us in this course to use. And again, we can just go over to, see, I have this moved over, ignore that. All right, the general ledger tab. And here's our list of all our general ledger accounts, or sometimes referred to as the chart of accounts. And I have it in a trial balance format. That's all the accounts together. And you'll see I have, here's all my asset accounts. I have cash, accounts receivable, AR reserve, inventory reserve, and then prepaid expense and other assets. Let's not focus on other assets for now. Let's just focus on prepaid expense because that's really what we're dealing here. Other assets would be like when you put deposits down or other obscure things like that. But really a prepaid expense is an expense you anticipate to incur. You're just prepaying it, but you're going to recognize it later, if that makes sense. Don't get too hung up on it. If you don't understand, you'll see as this progresses, and I would hope that you would understand by the end of this course. All right, so let's go now to our journal entry, and we have our accounts. Let's pick our prepaid expense, and now we need to put a memo here because this is just really good as a professional to put good memos. And so I would, if this was me and this was the real world and I was working for a company that was purchasing an insurance policy, I'd probably put something like this: Prepaid U.S. Insurance Incorporated, 12 months. I think that's a pretty good memo that tells you exactly what this transaction is all about. We bought it for $24,000, so we know that. Well, do we know if it's a debit or credit? Let's see. You probably know this because this is the fourth asset that we've had to deal with in this course, but just in case, we know prepaid expense is an asset. When an asset increases, it's a debit. So we're going to put $24,000 here. And now what's the other side of that entry, right? We got an insurance policy. Well, we got it because we paid cash for it. So our cash, that's an asset, went down. And when an asset like that goes down, it's a credit. So the offset of this entry, in order to make it balance, is going to be $24,000 of cash. Cash went down. And I kind of jumped the gun. I didn't even select the account yet. I'm going to go ahead and just copy the date, select cash. I'm going to copy the memo above it, and there is our completed journal entry for prepaid expense. Let's follow that through the general ledger. You can see our cash went down by an extra $24,000 in credits, bringing our total cash balance down to $116,000. And then if we look down here, our prepaid expense now is showing a debit of $24,000. Let's go to the income statement. Nothing in the income statement yet. No revenues and no expenses. Remember, we purchased an asset, but we're not going to recognize that expense until we close the books and we recognize it over the benefit period. We just purchased it. It's only March 31st, I believe, so there's no expenses that we have incurred. Let's go to the balance sheet now, and if we were to generate a balance sheet on March 31st immediately after this transaction, this is exactly what our balance sheet would look like. You would see, if you notice, our total assets is still $150,000. We're just taking cash and we're buying other assets. So our cash went down by $24,000, but our prepaid expense went up $24,000. So our total assets hasn't changed from the last video of $150,000. And then nothing has changed in our liabilities and shareholders' equity. That's still, if you remember, we took out a loan, we put $50,000 of our own money in so that we still have the liability of the loan, and we still are showing that capital contribution of $50,000 in the very first video. So our total liabilities and shareholders' equity is $150,000. That equals our total assets. Thus, our basic accounting equation works here. It's our assets equals our liabilities plus equity. Now, the last part of this video, we're going to go ahead and build out our prepaid expense schedule. And this is super important in the professional world. When you buy prepaid expenses, most accountants, most companies track these types of assets outside of accounting software. Most of these assets are tracked in Excel spreadsheets. This is a very common practice, so learning to do it here would benefit you tremendously. So here's a prepaid schedule, and this is a prepaid schedule very similar to something I use countless times for many different companies. I would use something just like this to track my expense, and this helps me to track my prepaid assets and also how to amortize it when I close the books every month. We're not going to close the books every month. We're just going to close the books at the very end of the year, which is going to be towards the end of this series. And you'll see at that point how we actually recognize the expense associated with this asset. So for now, let's just fill out this schedule and plug in our prepaid expense asset. So we'll put in the date, 3/31/2020. We'll say this is U.S. Insurance Incorporated, and the start date, the policy period for this thing starts on April 1, 2020, and the end date was 3/31/2021. The amount was $24,000, and now, it's for 12 months, and we'll say the monthly amortization, I'll just do a formula here, 24 divided by 12, that gives us our monthly amortization. Now we have the balance as of January 1, 2020, well, it was 0, but we just purchased it. So the way I would fill out the schedule, and I think I might have messed up in a previous schedule. So if this looks different than the way we've been doing it in the previous videos, just I'll correct it at the very end. But so here's the roll forward of this account. Here's our prepaid schedule. The balance was 0. On 3/31, we increased this account by 24,000. The balance now is showing 24,000. When we get to 12/31/2020, the balance won't be 24,000 because we're going to actually record some amortization of this asset. So that wraps up this video. I hope this video was super helpful. I hope you're starting to get what we're doing here, and I hope you're getting excited about how we're actually building up this company, and we're following the transactions through the general ledger, the financial statements, and we're also looking at schedules. My goal for you is to understand how accounting is done at the highest level of accounting in companies, and these are the things you would need to know in order to get to those high levels of accounting, like an accounting manager, a controller, or CFO. So I hope you liked the video. Look forward to seeing you in the next video. Thank you. Bye.